Everyone is asking the same question right now. Is the crypto bull market already here, or are we just being impatient? Prices feel quiet. Sentiment looks weak. Headlines are mixed. But history shows something important. The biggest bull markets never start when people expect them to. Right now, crypto is sitting in a transition phase, and that's exactly where major moves are born. Let's break down what's really happening, what the data is telling us, and how the next bull market is most likely to develop. 1. The current market reality at the moment, the crypto market is not in a full bear phase, but it's also far from euphoric highs. Total crypto market capitalization is hovering around $3.0 trillion, roughly 15% lower than a year ago and well below previous cycle peaks. Bitcoin dominance remains close to 59%, signaling that capital is still concentrated in safer assets rather than flowing into altcoins. Market sentiment indicators continue to sit near the fear zone, which historically appears before major upside expansions, not after. This combination tells us one thing clearly: the market is consolidating, not collapsing. 2. Why timing matters less than conditions. Trying to predict an exact date for a bull market is usually a mistake. What matters more is whether the right conditions are aligning at the same time. On the macro side, expectations around interest rate cuts, gradual improvement in global liquidity risk assets starting to outperform during calm periods. Crypto has shown increasing correlation with risk-on behavior, meaning when confidence returns, crypto often moves first and moves fast. A deep recession or major financial shock could delay things, but without that, the setup remains constructive. 3. Crypto-specific signals to watch inside the crypto market itself. Several structural shifts are already in motion. Bitcoin and Ethereum spot ETFs have changed the game. Over $120 billion is now managed through Bitcoin ETFs alone, confirming that institutional demand is no longer speculative, it's structural. This means large players are accumulating quietly volatility compresses before expansion supply shocks become more impactful. Meanwhile, innovation cycles, including tokenization, AI integration, and real-world asset adoption, are building narrative fuel for the next phase. 4. How bull markets usually unfold historically. Crypto bull markets follow a recognizable rotation pattern. Phase 1. Bitcoin leads, capital flows into Bitcoin first. Dominance rises. The market views BTC as the safest entry point. Phase 2. Ethereum follows, liquidity rotates into Ethereum as confidence grows. On-chain activity and network demand increase. Phase 3. Altcoins and high beta assets. Once momentum is established, smaller and riskier assets outperform. This is where volatility spikes, narratives explode, and retail returns. Throughout all phases, sharp corrections and liquidation events are normal. They are part of the structure, not a sign of failure. 5. What this means right now: we are likely in the early to middle transition zone of the cycle. Not the bottom, not the top, but the zone where positioning matters more than excitement. The real signal won't be one headline or one candle. It will be multiple factors aligning at once. Sustained ETF inflows, rising volumes, sentiment shifting from fear to neutral, then greed expanding open interest in derivatives. When these begin to move together, the bull market won't announce itself. It will already be underway. Closing the question isn't, is the bull market tomorrow? The real question is, are you positioned before the crowd realizes it has started? Because in crypto, the biggest gains are made quietly long before the noise begins.